Good morning, ladies and gentlemen. My name is Greg McGlosky from ForexLive.com. Today's date is October 23rd. It's Monday. New trading week. No Fed this week. They are in their quiet period ahead of or blackout period ahead of their Fed rate decision on November 1st. We do have a slew of earnings coming out in the stock market. Stocks are lower in trading here today, and the yields are once again higher with the 10-year approaching and moving above the 5% level to 5.02%. It is currently down at 4.98%. So let's kickstart your day by looking at three of the major currency pairs: the euro versus US dollar, the dollar versus yen, and the sterling versus US dollar from a technical perspective. Some down and up trading in the euro versus US dollar today. The move to the downside came down, tested the 38.2% retracement, and ahead of the near converged 100 and 200 hour moving averages. Those are the blue and green lines right here. This 38.2% retracement. The price did find support buyers against this area, and we started its rotation back to the upside. That upside was stalled against our resistance level up here. I talked about this in the video on Friday for the weekend, and this area corresponds with the number of different swing lows and swing highs through here. We got a little messy through here before moving to the downside. We returned to the high of that area near the 1.0616 level. 50% retracement is of the move down from going back here September 12th or thereabouts, and that comes in at 1.06087. And if you go to the daily chart, you can look at the 38.2% retracement of the move up from the September low right here to the July high right here. That level comes in at 1.06106. We're all familiar with these numbers by now, aren't we? Maybe. Anyway, going back to the hourly chart, what did we do? We went right in between that area. Remember, the 38.2% is in between here, and we found willing sellers against the level, and we pushed back down toward the closing level from Friday before moving back up. We are back up testing this area. If we start to move back above that level, then we should see momentum in the upward direction toward this swing area through here around the 1.0631 to 35 level. The high price that we saw a couple weeks ago came up to 1.063939. So maybe you can extend this to 31 to 39 here, and the 61.8% retracement of the move down from this high right here. This is the September 12th high to the low price that we saw here in October. Comes in at 1.0646. Now, if the pattern continues to find resistance against the 38.2% on the daily, the 50% retracement, the swing area on this hourly chart, then a rotation back down through the 1.0594 level might increase the bearish bias with the move toward the 38.2 and now the 100-hour moving average, both at 1.05709. So that's the story for the dollar versus yen. Let's take a look at the euro versus US dollar. Let's take a look at the dollar versus yen. And again, we have the 150 itis up here, which is proving to be a problem for traders. We got up to around, the 99-ish type area in trading here on Friday and again today. And we started to rotate back to the downside, currently trading, that 92. We're not exactly running in either direction, are we? What we do know is that the 100-hour moving average has held support here. We broke below it here, but then quickly moved above it and trading here today. In the Asian session, I guess we went a little bit below it at the opening and then reestablished support against it. It's now moving higher, 149.81. So 149.81 to 150. We've got 19 pip trading range that we're trying to maneuver the price action in the dollar versus yen. At some point, we're going to get either a break to the downside where we'll look toward the 200-hour moving average and then look toward these levels on the downside, including the swing area, and then the 38.2% retracement of this last move to the upside. Or we break above the 150 level and try to inch our way toward the 15 level, which was a high price going back to this day. That was the jolt trading day where the market got jolted and then moved 280 pips to the downside. Fears about the Bank of Japan keeps the upside somewhat limited. That they may come in and say something either from policy standpoint or from a intervention standpoint. So we got to deal with that. And the same old story. If you don't want to trade it, don't trade it, because there is more risk of potentially something like this, 100 pips to the downside, or 280 pips to the downside, just by the market's anxiety and fear. Let's take a look at this sterling versus US dollar next. And this currency pair trades in between the 100 and 200 hour moving averages. That's this blue line right here and this green line right right here. You can see that the market highs trading here today came up to that 200-hour moving average. It's had sellers leaning against that level. If you can sell against it and hope that the price moves lower, your risk is a move above that moving average. But as long as it stays below it, you have the potential for a rotation to the downside. And we saw it here, and we're trying to see it here. We're just a few pips off the high price, though. The 200-hour moving average comes in at 1.21856, and that would be a barometer in the new trading day move above it. And we should see further momentum with the potential for a move up toward this swing area through here, and then the 38.2% retracement level of the move down from the September, I guess it's like September 11th high, this high right here, somewhere around there, maybe the 11th or 12th. We've broke above it, back here, the 38.2, but getting above it again would be somewhat significant. It's also home to a number of different swing lows and swing highs going back in time through here, break to the downside, and then had resistance against it here, and then support against it here, and then resistance against it here. You see my point of all these times where the price came to this area and found either support or resistance. So this 122.19 to 31 level would be a level to get to and through on the top side if the bias is going to move to the upside, with the pound being bought over the US dollar. Conversely, if the dollar is bought against the pound, we've got to get and stay below the 100-hour moving average. Admittedly, we did in trading here today, or we did go below the 100-hour moving average, but we could not sustain that momentum. On the downside, we have this swing area right here, which was pretty good until it was broken last week, and then it was broken again on both Thursday and Friday. But each of the time the price moved down to this 120.88 level, which was somewhat, not necessarily anything special, but what it proved that the sellers here cannot sustain momentum. The sellers here cannot sustain momentum. Be aware that it might be support right here. We'll just to guess on the first test. My name is Greg Michaelowski. I hope you found this video interesting and kickstart your trading week. Good fortune with your trading.